Options trading. The great democratizer. The thing that was supposed to let regular people play in the big leagues. The thing that was supposed to be, and I quote, very safe. Today we have 5 stories that prove, conclusively, that it is not. Every single day, thousands of people open a brokerage account, watch a 20-minute YouTube tutorial, and decide they understand derivatives. They don't. They really, really don't. And the evidence is overwhelming, documented, and hilarious. There's a gap. A beautiful, catastrophic gap between what options traders think they're doing and what they're actually doing. Today we're going to live in that gap. 5 stories. 5 flavors of chaos. From accidental stock ownership to a man betting his dignity on Nvidia's opening price. Buckle up. This is going to take a while. Welcome. Let's begin. And I promise you, by the time we get to trade 5, you will have questions about the human condition that I am not qualified to answer. Trade 1. Our guy Moto626 describes himself as a, quote, reasonably experienced investor. He sold iron condors on Microsoft. Very safe, he said. Wide spreads, he said. January was going to be boring, he said. Let me explain what an iron condor actually is, because this is important. An iron condor is when you sell both a call spread and a put spread on the same stock at the same time. You're basically betting the stock stays flat. You collect premium from both sides. You profit if the stock does absolutely nothing exciting. Microsoft. The company that makes Windows. The one that just partnered with OpenAI. Surely nothing exciting would happen. Microsoft tanked. And here's where our new options trader learned a very important lesson about assignment that nobody bothers to mention in the YouTube tutorials. The lesson that costs money to learn and costs more money the longer you wait to learn it. Assignment. When you sell a put option and the stock drops below your strike price, the option buyer can force you to buy their shares at that strike price. You don't get to say no. You don't get to negotiate. One morning you wake up and you own 100 shares of Microsoft whether you like it or not. It's like ordering takeout and the restaurant also delivers a live goat to your apartment. His post is genuinely adorable. I don't want to own 100 Microsoft. Help. How do I handle this? He used an exclamation point. He's scared. We've all been there, brother. Well, not this specifically. But the panic? Absolutely. The cold sweat at 7 in the morning when you open your brokerage app? 100%. The top comment, 192 upvotes, is just 3 words, sell it at open. No punctuation. No sympathy. Just the cold, clinical efficiency of someone who has answered this question 800 times and has completely run out of warmth. Second comment, close your positions before expiration next time. Advice delivered with the energy of a disappointed father. But then, and this is the interesting part, the community starts pitching the wheel strategy. Sell covered calls against the shares. Collect premium. Let them get called away at your assigned price. Turn your accident into an income stream. A covered call is basically selling someone insurance on a stock you already own. You collect the premium, they get the right to buy your shares at a fixed price. It's the closest thing to free money that isn't actually free money. And our guy accidentally stumbled into being a candidate for it. Sometimes the universe is kind. Sometimes you fall into a strategy by accident and it works out. This is fine. The community also suggested the wheel strategy. One commenter said, sell weekly call option at the same assigned price and let it pay you every week while you wait to sell the shares. Another said, sell Microsoft calls at 0.2 delta until they get assigned and you lose them. This is how accidents become strategies. Beautiful, accidental, slightly terrifying strategies. The lesson from Trade 1, assignment is not a disaster. It's just a surprise. And the cure for surprises in options trading is reading the documentation before you sell contracts on a $400 stock. Mild chaos. Gentle panic. A soft introduction to today's theme. It gets much worse. I promise you it gets much worse. But wait. It gets worse. It always gets worse. That is the one constant in this universe. Entropy. Heat death. And the WallStreetBets portfolio. Trade 2. Our friend Afa over on WallStreetBets posted their portfolio with a simple question, any chance for these to recover? And a crying emoji. Which tells you everything you need to know before you even see the screenshot. The emoji is doing a lot of heavy lifting here. Here's the portfolio. Take a moment. Absorb it. Read. All of it. Every single position bleeding. And the community immediately started the forensics. The top comment, 433 upvotes, this dude actually listened to the mouth breathers at R Value Investing. LMAO. 433 people agreed. That's a consensus. That's a mandate. The second comment is a business opportunity. 353 upvotes. People are literally trying to monetize this man's failure in real time. This is WallStreetBets at its purest. Someone else's loss is your inverse ETF. Let us know what you buy next so I can short them. That's the comment. 353 upvotes. A man offered to turn this portfolio into a short-selling signal service. Free of charge. Out of pure community spirit. This is the most efficient market I have ever seen. But then, a detective emerges. 107 upvotes, bros sorted by worst returns and thought we wouldn't notice. He sorted by worst returns. He curated his suffering. He arranged his losses from least catastrophic to most catastrophic and then posted it publicly asking for hope. This is performance art. Imagine trying to explain this to your wife's boyfriend. No honey, I sorted them. By how bad they are. For the screenshot. He probably shorted the same stocks. And my personal favorite comment, the RTRD ETF. 24 upvotes. Someone literally invented a fictional exchange-traded fund to describe this portfolio. That's poetry. That's finance journalism. I want that on a Bloomberg terminal. I want it on a prospectus. I want it filed with the SEC. 160 upvotes for this, it's like the Super Bowl of bag holding. And they're not wrong. This portfolio is a championship-level achievement in being wrong about everything at the same time. That takes skill. Inverted skill. But skill. The lesson from Trade 2, diversification doesn't mean owning 10 different bad stocks. That's just being equally wrong about everything simultaneously. Also, if you're going to post your losses on WSB, maybe don't sort them by how bad they are. Or do. The content is great either way. We appreciate the sacrifice. Remember our first guy who only panicked about owning 100 shares of Microsoft? Those were simpler times. We were younger then. More innocent. The world had not yet shown us the RTRD ETF. Trade 3. The CME. The Chicago Mercantile Exchange. One of the largest derivatives exchanges in the world. The place where billions of dollars in futures and options on metals and natural gas trade every single day. It halted. Just stopped. Gone. The whole thing. The post author, KingMav24, summed up the situation with the eloquence you'd expect from a WSB contributor. Is it over, guys? Is this the end? No context. No analysis. Just existential dread in 9 words. Hemingway could not have done it better. A trading halt on a major exchange is actually a big deal. When CME halts options on gold, silver, copper, and natural gas simultaneously, every trader with open positions in those markets is frozen. You can't close. You can't hedge. You can't do anything except sit there and watch your Greeks deteriorate in real time. Your delta is moving. Your theta is burning. Your vega is doing something you don't fully understand. And you cannot do a single thing about it. The market is open but the door is locked. You're just standing outside watching your money through the window. This is the options trading equivalent of getting assigned on a stock you didn't want. Except instead of 100 shares of Microsoft, you get 100% helplessness. The community response was, as always, perfectly calibrated. Top comment, "Oh yeah. Let's get this party started." 105 upvotes. The circuit breakers come on and WSB starts cheering. This is their natural habitat. Chaos is the home field advantage. 80 upvotes for this gem, they're testing before the war. Expect another cooling issue incoming. Because when the CME has a technical problem, obviously the correct interpretation is geopolitical warfare preparation. Obviously. This is just basic due diligence. And then, my absolute favorite, GameStop has natural gas now. Someone show me how to buy calls. 46 upvotes. This person saw the words natural gas and halt and immediately thought about GameStop and options. The neural pathways in this community are unlike anything else on earth. I say this with genuine admiration. There were updates. The halt eventually ended. Natural gas resumed at 1:45. Metals at 2:45. The world did not end. The war did not start. Nobody got to buy GameStop natural gas calls. A normal Tuesday. The lesson from Trade 3, sometimes the chaos isn't you. Sometimes the exchange itself just breaks. And when that happens, you wait. You cannot options trade your way out of a system-wide halt. Patience. A foreign concept on this channel, but still. Sometimes the casino closes early and you just have to go home. Okay. 3 trades in. We've had accidental stock ownership, a gallery of curated losses, and an exchange-level meltdown. I need you to take a breath. Because trade 4 is where we leave the realm of personal finance and enter the realm of corporate philosophy. And the numbers get much, much bigger. Trade 4. Block. The payments company formerly known as Square. Jack Dorsey's other company. The one that isn't Twitter. Or X. Or whatever we're calling it this week. They announced they are laying off approximately 4,000 employees. Nearly half their workforce. Gone. In one announcement. The stock went up 24%. Let me say that again. They fired half the company and the stock went up 24%. If you're watching this and thinking the market is rational, I want you to hold that thought and sit with it for a moment. Really sit with it. Jack Dorsey posted an explanation on X, which is also his company, explaining the layoffs on the platform he owns, to announce the decision at the company he runs. The statement included the phrase, and I am reading this verbatim, "We are not making this decision because we are in trouble. Our business is strong. The business is strong. 4,000 people just lost their jobs but the business is strong." This is the options trading of corporate speak. You think you understand what's happening but actually you're getting assigned 100 shares of unemployment. The premium you collected was your salary. And now it's gone. The comments on this post are genuinely bleak. 433 upvotes for, "We are doomed." 333 upvotes for, "The stock has gone literally nowhere in 8 years." And 244 upvotes for this, "Loyalty doesn't mean anything. Everyone should just do the bare minimum and keep your toes dipped in the job market 24/7. And the one comment that ties this back perfectly to our theme today, "All that matters is shareholder value." In all caps. Because sometimes the only way to express certain truths is to turn caps lock on and just commit. No punctuation. Just pure unfiltered capitalism in 12 words. And then there's this comment, 74 upvotes, companies no longer see employees as assets. Employees are liabilities, and like all liabilities on the balance sheet, the goal is to reduce them to as little as possible. Why do you think corporations are pouring trillions into AI? This person accidentally wrote a finance textbook in a Reddit comment. Here's the uncomfortable financial truth. From an options and investing perspective, this is how the game works. Companies that cut costs aggressively get rewarded by the market. If you were long block calls before this announcement, you made money. If you were short, you got assigned something worse than 100 shares of Microsoft. You got assigned a lesson about how capitalism actually operates. And that lesson doesn't have a wheel strategy. Okay. For trades. We've covered accidental assignment, curated catastrophe, exchange meltdown, and corporate nihilism. You might think we've seen everything. You would be wrong. So magnificently, cosmically wrong. Trade 5 is in a category that does not exist in any finance textbook. Trade 5. And I want you to understand that everything up to this point has been a warm-up. A palate cleanser. An amuse-bouche of financial chaos before the main course. What we are about to discuss is the pinnacle. The apex. The final form of options trading gone wrong. In the WSB Discord server, a user by the name of Educational Fox 309 made a bet. The bet was as follows: if NVIDIA, which they spelled NVIDIA, is not read by open, they will show everyone their butthole. That is the complete and unabridged terms of the agreement. I want to pause here. Because this is a person who looked at the current macroeconomic environment, assessed the technical setup on NVIDIA, considered the implied volatility, the options chain, the market sentiment, and concluded that the correct hedge for being wrong was showing the internet their butthole. This is options theory at its absolute zenith. Let's talk about the actual NVIDIA position here. This person was bullish on NVIDIA. They believed it would open green. That's the bet. They were so confident they were willing to put their literal body on the line as collateral. That's a conviction trade. That's diamond hands in a form we have never seen before and hopefully will never see again. Now notice that they spelled NVIDIA as NVIDIA. The community noticed. 252 upvotes just for quoting NVIDIA back at them. This person bet their dignity on a stock they cannot spell. That is a sentence I never expected to say on this channel. Also 286 upvotes for, what's an NVIDIA? Beautiful. The community collectively pretending not to know what the second largest company in the world by market cap is because someone spelled it wrong. This is the most sophisticated trolling I have witnessed in years. Now. The investigation. 587 upvotes for this, zero karma, and last activity was a year ago. This guy betted on a burner account. He's definitely not going to deliver. A forensic analysis. A Reddit detective running background checks on a man who bet his dignity on NVIDIA's opening price. The internet is something else. So what happened? NVIDIA opened red. The bet was technically won. Or lost. Depending on which side of this equation you're on. And the post-edit confirms it, despite our collective hopes and dreams, NVIDIA dipped into open and this person did not have to post hold. I want you to read that sentence again. Despite our collective hopes and dreams. The top comment, 1008 upvotes, no buttholes today. 1008 people upvoted that sentence. That is more upvotes than most legitimate financial analysis gets on this platform. The people have spoken. The market has cleared. No buttholes today. And 98 upvotes for the most philosophical comment of the entire thread, I know debts must be paid. But do we really want to cash this check? This is the question that haunts all of options trading. Do you want to be right? Or do you want to be comfortable? In this case, being right meant someone not posting their butthole. So everyone is a winner. Or a loser. It's unclear. The lesson from Trade 5, if you're going to make an options bet that involves your body as collateral, maybe use your real account. Accountability matters. Skin in the game, as they say. Or don't. Actually don't. Please don't. None of this. Close the Discord. Call your mother. Eat a vegetable. Also, this is a good time to note that if you're watching this video and thinking about making a Discord bet that involves showing people things, the answer is no. Stop. Close the app. Go outside. Touch grass. This message has been brought to you by Basic Human Dignity. Sponsored by nobody because nobody wants to be associated with this. So. 5 trades. 5 lessons. Let's recap the full arc of today's chaos. From the mildly panicked to the cosmically unhinged. A journey I am grateful to have taken with you. Trade 1, a guy accidentally got assigned Microsoft and panicked. The community held his hand. He'll be fine. He learned about covered calls. It's almost wholesome. Trade 2, a man curated a portfolio of catastrophe, sorted it from bad to worst, and posted it publicly. The community invented a fictional ETF to describe it. Efficient markets at work. Trade 3, the CME broke and WSB immediately wanted to buy GameStop natural gas calls. Some things cannot be taught. Trade 4, Block fired 4,000 people, the stock went up 24%, and Jack Dorsey said the business is strong. This is not options trading, but it has the same energy as selling a put and getting assigned at the worst possible moment. And Trade 5. Educational, Fox 309. Who bet their butthole on Nvidia? Who used a burner account? Who was saved by Nvidia's Red Open? Who didn't deliver? The market, in this one rare instance, showed mercy. We don't deserve it. But we got it. This is what they mean by tail risk. The real lesson from all 5 of these today. Options are not magic. Assignment is real. Halts are real. Corporate greed is real. And Discord bets are, apparently, also real. The gap between what you think you're doing and what you're actually doing in this market will get you every single time. Unless you're very lucky. And then it'll get you the next time. That's the game. That's always been the game. If you enjoyed watching other people's options chaos, subscribe. If you didn't enjoy it, you might want to examine why you're here. And if you're educational, Fox 309 watching this right now on your burner account, we see you. We always see you. The market sees all. GUH.